Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and welcome to my Dividend Growth Portfolio Recap for July 2024. In today's video, I'm going to be sharing stuff like my current portfolio value, the best and worst performers in July and all time, what was bought in July, the dividends received in July, comparing the month-over-month and year-over-year progress of those dividends, and then lastly, I'm going to check on the 12-month dividend projections and how my dividend snowball is coming along. Before we dive into my portfolio value, I'm really curious. I want to know how long you guys have been investing and how big your portfolio is, so let me know down in the comments below. But now let's see how much this portfolio has grown so far in 2024. All right, and looking here, you guys will be able to see my account balance of this portfolio and how it's grown so far in 2024. Beginning the year, I had a balance of $67,196.27. Concluding last month, that went up to $74,449.90. And concluding July, we now sit on a balance of $77,360.90. That gives us a year-to-date growth of $7,253.63, or 10.79%, and a month-over-month growth of $2,911, or 3.91%. It is important to note that $17,000 of that account balance is my emergency fund stored in SPAXX, collecting a current interest rate of 4.98%, but it's been that way all year, so it's been consistent for this graphic. Next, let's go ahead and see how much money I added for the month of August and how much money I actually have to invest for the month of August. So looking here at this chart, you'll be able to see that $833.34 that was added on August 1st to invest for the month. And what happens is any money that is additional to that would be anything from interest and credit card cash back, and that gives us our total amount to invest for the month. So looking down here at this screenshot, you'll be able to see where it says available to trade. We have a $17,899.03. Again, $17,000 of that is untouchable, which leaves us $899.03 to invest for the month of August. So now let's see what I'm going to be investing that into. So right here, you'll be able to see all 11 of my holdings. I currently have 9 active holdings and 2 dormant holdings, with Starbucks and ExxonMobil being those dormant holdings. And the reason behind that is because they are failing to outperform the S&P 500 over the past 10 years, which is my #1 metric. So that's kind of inexcusable. I kind of put them on punishment for that reason. So I am curious if you guys have any suggestions on what to do long-term with those dormant positions. Currently, I plan to only drip and never sell unless they cut or suspend their dividend. But I could also ignore that metric and buy to lower the cost basis. In that case, it would only be Starbucks because ExxonMobil is actually green for me. I could also turn them active to lower my cost basis. Again, that would be in Starbucks, but I could end up turning both of them active and not have any dormant positions. I could turn off the drip and wait 1 year to sell to see if they begin to meet my metrics after that 1 year, or I could turn the short-term capital gains from the dripping of the dividend into long-term capital gains to make it more tax efficient, or I could just sell these now and add a new position, or put the money from the sales of those positions into my current holdings. So I'm really curious what you guys think I should do with those dormant positions. If you guys have any thoughts, leave those in the comments down below. But now let's go ahead and share with you the top 3 best performers in this portfolio just over the past 30 days. So over the past 30 days, the third best performer is AbbVie, up 6.84%. And this one's actually back-to-back months in the top 3 best performers. So AbbVie's really been on a roll for me. So coming in at number 2 is my second best performer this month is NextEra Energy, which was up 7.33% over the past 30 days. And then the top performer this month was actually Pool Corp. That was up a massive 22% over the past 30 days, which is kind of wild. Also, this one was my #1 worst performer last month. So Pool Corp has always been very volatile, and this one puts that, case in point. So next, let's go ahead and quickly look at my bottom 3 performers over the past 30 days. So coming in as my third worst performer over the past month is actually in the green, and it's Visa. That was up 0.52%. That's always a good sign when your third worst performer for a month is still in the green. So you like to see that. But we did have some red performers. So coming in at number 2 is Costco, which I didn't know was possible, but it was down 3.59% for the past 30 days. So, I did get a chance to see Costco in the red, which almost never happens. And we'll see how that impacts its total performance for me since I've held it. But we are down in the red for this month. And then coming in at number 1, my worst performer this month was Microsoft. That was down 6.75% over the past 30 days. Also, not normal, a normal occurrence with Microsoft and Costco both being down in the month. But we'll just call it a good buying opportunity and move on. So next, let's go ahead and see how that impacts, like I said, the overall winners and losers in the portfolio. See if any of these numbers that we just talked about did it have any impact on that. So let's look here at my overall winners, my top 3 for the portfolio all time. So coming in at number 1 is Costco, despite being my second biggest loser this month. Costco is up 48.77% or $2,128.80. Coming in at number 2, second best performer all time in this portfolio is ExxonMobil, up 39.8% or $1,403.09. And my third best performer in this portfolio all time is Microsoft, up 34.08% or $1,849.44, despite having a really bad month, actually the worst month in my portfolio. So next, let's go ahead and flip this chart upside down and check out the biggest losers in this portfolio. So looking here, my biggest loser in the portfolio is my dormant position of Starbucks. That's down 19.75% or $860.84. Coming in at number 2, my second worst performer is APD, down 5.32% or $222.59. And coming in at number 3, my third worst performer all time in this portfolio is actually Pool Corp, despite being up 22% over the past month, but it is now in the green, up 1.13% or $59.21. So the last month really helped me turn this position around, and it's now a profitable position for me. So you like to see that. So looking down here at the bottom right, you can see that this portfolio is up 18.19% overall or $9,150.58 in the green. So let's go ahead and plug these numbers in, and let's see how this portfolio is performing over the past month, over the past 3 months, year to date, 1 year, 3 years, stuff like that, versus the S&P 500 and the other major indexes. So with this chart, you'll be able to see that 1 month return of 2.68%, both for my time weighted and money weighted. So my dollar cost averaging strategy this month hasn't had that much of a big deal, hasn't made that much of a big deal rather. But we are outperforming the S&P, up 1.22% over the past month, and we're really outperforming the NASDAQ that was down 0.73% this month. We did underperform the Dow Jones, but 2 for 3 this month is pretty good. So then let's just go over, we'll skip right to the year to date. So year to date, this portfolio, we're going to look at the money weighted because I do dollar cost average. So that's showing that my money going in over different periods of time has a different return than just lump sum investing. So up 7.44% money weighted return year to date for my portfolio, which is underperforming all 3. So S&P is at 16, Dow Jones is at 9, and then the NASDAQ's at 17, basically almost 18. We're underperforming all 3 of those. The 1 year returns, you can really see the difference in my portfolio between the time weighted and money weighted. We're up, 1.6% almost, just by doing my dollar cost averaging strategy. So you like to see that. We still are underperforming over the past year, all 3 indexes, but then we get really interesting. So over here on the far right, we have the 3-year returns, where I have a money weighted return in my portfolio over the past 3 years of a plus 13.72%, which outperforms the S&P, Dow Jones, and NASDAQ by a decent margin. So you like to see that. I think the goal, it's too much pressure to try to beat the S&P 500 every month or every 3 months or year to date and stuff like that. But over the long term, if I can actually outperform the market over the long haul, that's kind of what we're going for, because I am a long-term dividend investor. So you like to see that. That makes me at least feel a little bit better about my portfolio. But yeah, anywho, so let's go ahead and get in and let's see what I bought in this portfolio over the month of July with this chart right here. So you guys will be able to see all the stocks I bought on the left side, which is all of my holdings. I did no new holdings. The stock I bought the most of this month was Next Era Energy, adding 1.379 shares. The stock I spent the most money on was Visa, adding $129.59 into Visa. And the stock that added the most forward income was AbbVie, bringing in an additional $3.48. In total, I added 4.478 shares over the course of 19 trading days. I spent $963.38 and added $16.35 in added forward income. So let's go ahead and quickly see what these buys did to the cost basis of the positions in this account with this chart right here. So it looks like I have a lowered cost basis in 2 of my holdings, which will be the green boxes in the difference column, and I increased the cost basis in 7 of my holdings, which will be the red boxes And both of my dormant positions are neutral. Neither, they didn't go up or down because I didn't buy anything and I didn't have any dividends dripping into those positions. So they stayed where they were. So my biggest increase in cost basis goes to Costco. Despite being down this month, I still increased my cost basis because my cost basis is almost $300 less than the current share price. So you love to see that, which is why it's my best performer. My biggest decrease in cost basis goes to Pool Corp, despite it being up 22% for the month, thanks to dollar cost averaging, where I went from $370.91 per share to $369.84 per share. So we decreased by $1.06 there. So you love to see that. So this is a dividend channel. It's my dividend portfolio recap. Let's go ahead and share with you the dividends I received in this portfolio for the month of July. So I actually only received one dividend and one interest payment this month, which is a little sad. It does always lead into the next month, which will be August. It's going to be a very good month for me. I think I have like 6 payers that month and an interest payer. So you take it for what it's worth kind of thing. It's a slower month this month, but we do have a lot of progress to share. So the first and only dividend payment this month in July was on July 11th from Illinois Toolworks for $24.63. Now that's compared to the $22.92 the last time I received money from them, $15.08 the last July. So we're up $24.63 this July from $15.08 last July. It was $6.05 the July before that. And then all of this started from humble beginnings when I received that first 34 cents to start 2021. So in total, I've now received $150 even in career dividends from Illinois Toolworks, which comes out to 5.8% of the total dividends received in this account, which has also earned me 0.638668 shares for free via the drip. So last but literally not least is the interest payment of $73.87 from SPAXX on July 31st. It's more than the $70.90 I received last month, and it's more than double the $30.59 this same time last year. So in total, SPAXX has now paid me $821.59 in career dividends, accounting for 31.76% of the total dividends received in this account. And none of that is technically dripped, but it did give me an extra $821.59 to be invested into my other stocks. So we'll call that a win. So next, let's add these numbers up and plug it into my chart to see how we're growing so far this year, how we're growing compared to last quarter, and all the things like that. So with this chart, you'll be able to see I concluded July 2024 with a total of $98.50. We were really close to breaking that $100 mark. I think we'll get it in October, but we'll see. So we were at $90.50, which is a 115.7% increase from last July. Last quarter in April, for the same month of the quarter, April brought in $93.85. The first quarter in January, I would have brought in $95.34 if you subtract that $99.11 special dividend I received from Costco, all of which gives us a 2024 year-to-date total of $1,110.90, which is already 18.8% higher than what I received in all of 2023, and we still have 5 months left to go. So if I add these numbers up and do a little bit of fancy math, that gives me a yearly projection as of now, as of the end of this month, of $1,734.49. That would be an increase of 85.47 versus 2023. And I'm honestly expecting that number to be higher by the end of 2024, somewhere in the high 1800s. So we'll have to see if I'm right about that. So make sure you keep coming back and definitely watch the last episode of the year and see if I was right. So next, let's go ahead and quickly look at the PADI, the projected annual dividend income. That's changed a lot over the course of the year, so I want to share that with you guys as well. So looking right here, beginning of the year in 2024, January, we had a yearly projection of passive income, just passive income, not including any interest, of $918.73 for the year, which comes out to $76.56 per month or $2.52 per day. As of the end of last month, that bumped up to $1,032.59 for the year, $86.05 per month or $2.83 per day. And now concluding July, we're up to $1,048.94 projection for the next 12 months, which comes out to $87.41 per month or $2.87 per day. So our year-to-date increase in income is $130.21 from July to January. And again, this is interest not included. And the month-over-month increase from June to July is $16.06 $2.35. So I want to also show you really quick the career dividends I've received in this account to show you that this account is really starting to bring in the cash. So right here, you'll be able to see how much money I've brought in career dividends just in this retire early account, which is it's really cool for me to see because this, like I said, this portfolio started with nothing, generating literally pennies on the dollar, to now we're up to $2,586.86. We are getting really close to that $3,000 in dividends in this retire early account, and we're also getting close to 12 drip shares that I've gotten for free. I'm confident in both of these milestones by the end of the year, so time will tell if my gut is right or if that's just indigestion. So like I said, stay tuned for that. We're going to see if by the end of the year we can get up to $3,000 in career dividends and 12 free shares of companies that I love to own. So we'll see. So stay tuned for that. Last thing I want to share with you guys is my milestone trackers. I call these my dividend snowball trackers. The dividend snowball is something that dividend investors really like to talk about a lot, but there hasn't been too many great ways I've seen it actually shown. I've seen the bar charts, I've seen the line charts, stuff like that, but I wanted to see if there was a different way to show it. So I came up with these charts right here. I have a buy 100s chart, which is the first chart I started because the increments I was going up was really small. So buy 100s was plenty enough to track. But now the snowball started to pick up some speed. So I needed to create other charts. So I did create $250, $500, and $1,000 charts, which I'll show you guys momentarily. But first, let's look at this buy 100s chart. We did reach that new milestone of $2,500 in career dividends. So we actually had updates to the 100s, 250s, and 500s. We didn't reach $3,000 yet, so I don't have any updates to the $1,000 chart, but we'll get to that hopefully, like I said, by the end of the year. So this buy 100s chart, it took me just down here at the very bottom, you guys can see it took me just 24 days on June 17th to July 11th. 24 days to go from $2,400 to $2,500, which does beat the average of 60.12 days. So we're less than half of the average days it takes you. You guys can see all the way at the top. I've talked about this 1,000 times already, but the very first $100 took me 394 days. So over a year to make my first $100. And now we're down to making $100 in every calendar month, which is really cool to see. Looking here, same thing, same chart. This one's by 250s. So to go from $2,250 to $2,500 took me just 41 days, which actually is less than the last mile marker of 64 days and way less than the average of 150.3 days. So you love to see that. And then the last one that we have an update for is the buy 500s, because we went from 2,000 to 2,500. That took me 105 days to do, which is far less than the 300.6 days on average. Again, here's the 1,000 chart. We don't have any updates there. You guys can see it took me 1,182 days to get my first $1,000 and just 216 days to get my second $1,000. So I'm really curious to see how long it's going to take to get that $3,000 mark and where that number falls in there. So I am expecting it to probably be a little higher than 216 days. We might have already passed 216 days. I don't know. But I did want to actually speak on that really quick. So if I pull back up this 500 chart, for example, you guys will see how we went from 922 to 260 to 140 to 76, but now we're back to 105. And people might be wondering, why are we going up? Like, why is the snowball slowing down? Well, I think just doing constructive thinking about that, I think what happens is if I just passed $2,000, like you can see, I passed $2,000 on March 28th. Well, April's a very low income month for me. Like I said, it's 1, 4, 7, 10 are very low income months for me for my dividend portfolio. So if I just passed it, like barely, like $2,001 or whatever it was, and then I have a really low month, that basically eats into 30 days and it barely moved at all. And then you finally get to my good month of, what would that be, May and June. And then that's what helped me really carry over into the $2,500 or get me really close. And then I use the first dividend of that, again, low month to get me to $2,500. So I think it's just a timing thing and also how far the one dividend puts me into the next bracket, right? So if I was at $2,001 when I started the next cycle, and then I had to really gain $499 versus say I really cruised past the $2,000 and I got a really big dividend or something and I was at $2,097 or something. That's obviously way more obtainable. It's way closer to the $2,500 mark to get to that milestone, so it makes it shorter. I think my overall goal since adding this averages is going to be to get the new number to constantly be lower than the averages, and also to keep the averages keep getting smaller and smaller over time. So that'll make it like a double competition kind of thing. I'm trying to beat that number and lower that number. And if I do beat that number, it's going to lower the number, which means the next time I have to try to beat the number and lower the number, it's going to be that much harder. So the snowball is really going to have to pick up, which is obviously the point. But that wraps up my July 2024 recap of my dividend growth portfolio. If you guys enjoyed this video, please remember to leave a like on the video as it helps me continue to grow the channel. If you guys aren't subscribed already, do that. I have tons of other great dividend content out, and these videos come out the first Monday of every month, so you guys will be on the lookout for those. But before you go, if you guys happen to be in the market for some super high quality dividend stocks, make sure you check out this video right here that comes out every Friday at 8 a.m. Central Standard Time. But until next time, see you.